selling between a 5 and a 6 cap on next year's pro forma without marking up for taxes. Well, today, when people talk about it, and I talk about a 10 cap, it's important to understand what are you talking about. When you're talking about next year's rents, if the rents are going lower, or if you're in a shopping center and the major leases are coming up, you need to understand what exactly are you buying. So that's the distinction on cap rates of trying to understand what do you have today and what are you really buying in real cash flow.
The organization is looking for, through our investors of course, properties where there's a lot of income producing, either now or in the next 18 months. And we have been focused in the last 6 months on senior housing projects. We've done an evaluation and we find that there is a big necessity in Houston and the surrounding areas of Greater Houston for senior housing projects. And we are focusing very extensively on senior housing opportunities. We've got a couple that we're evaluating right now. But investment properties is very critical. Our investors are looking for properties that can turn around and give them some income. And again, I think that's a cushion feeling. Is okay, fine, I put in $100,000 in a deal, but I'm getting $3,000 back every month. It makes them feel good. As I said again, this is a confidence crisis. I believe this is not a credit crisis. So that's how we're playing the market with the different product types.
When I say VC types, preferably late 70s, now early 80s. Was usually look at 150 to 200 units. Now we also look at some portfolios, 600 units, over 1,000 now. Comes back to the location, where you're buying those properties. I need to be able to understand that. So us, it's still kind of, we understand what you're doing in terms of the operation, in terms of the marketing, in terms of the real work, and we still have the exit with the refinance. So multifamily, VCs, and Dallas and Houston.
Credit crunch, and why don't they learn from the past?
That was my question to you. I don't get the regulator thing. Obviously, what I read was that regulators, behind every regulator is a politician. And so if the political winds say, okay, regulators crack down, they crack down. Okay, don't look the other way, they look the other way. I mean, that's what I got out of reading the literature. So, I don't know what the environment is today. You would have to suspect that they're being pretty hard on the regulators at this point.
Comments that you might want to make to the crowd. I'll start with David, then Nozer, and then Carlos.
I think we're going to have a tremendous opportunity to be a buyer. I think that time period is a little ways off. Again, as I said, I'm a numbers-driven individual, but there will be opportunities to make tremendous buys. My caution is thinking about the lessons of the 80s and 90s. In 1984 and 1985, I was a seller, and I sold to vulture funds. By 1986, they were out of business, but I was still around. So it's important to be very smart, be very attentive to the marketplace, look for the markers that are out there, don't ignore them, understand what's happening, be in touch with the banks, be in touch with the agencies. There's going to be just an amount of product for sale in the next 3 to 5 years that's going to make the days of the RTC look like elementary school.
Nozer.
Well, I have two comments to make. One, because we have a captive audience here, we are still in the buying process. And if there are properties out there that you people in the lending business know of, we've got investors that are very eager, and we will look at every property very seriously. The second comment is, I would urge every lending institution, and it sounds very easy, but I think it would go a long way if every lending institution and banks looked at relationship lending and not just focused on the pressures that come from above, because this is the time I believe you have to build relationships with people. There are people out there that are performing. There are people out there that are paying their loans on time, that are paying their interests on time. And it is not really fair to go after those people at the end of the loan and say, unless you pay 20% down, I'm not going to renew your loan, knowing fully well that there's no other bank that's going to do it. So you've got to look in a relationship fashion with people that you actually work with, I truly believe this is the time to build those relationships in the market.
Well, I completely agree. I think right now the main opportunities come, and for the next 6 months, the next year and a half or so, more things are going to become available. Reason why we're coming to Houston now. It's very important, in a certain way that I can say, is that kind of never reinvent the wheel. If the deals make sense, we go back to financial 101. The deals make sense, then it's going to be a deal. And it's going to be okay to let many deals go because more deals are coming. If the deal, don't try to work that much with those numbers if you don't feel comfortable. And something that I realized is that there's so many vulture funds. You open the newspaper and a vulture fund here, a vulture fund there. But I also see that some of the deals that you're buying, it doesn't make sense to me. That's not a vulture fund. To me, that's a chicken fund. You're buying something that one is going to bite you back. It's still alive. And that's something, as a company, we're trying to be very, very, very conservative. And as you know, we're coming to Houston now. I'd like to say thank you all. I look forward to more business here.
I'd like to thank our speaker and our panel. Panelists and speaker are willing to stay for a couple of minutes. If you have questions you want to ask them, you didn't want to share that question with all of us. You want to get them over in the corner, they're willing to do that. We hope that you'll take some information on our group with you. It's on the table. We are looking forward to continuing to have programs like this. We're planning to have one in January. If you're interested or you'd like to suggest any topics for our group, just tell any of us who are members, and we certainly look forward to being back here with you soon. Melanie has one last thing to give away, something free. Isn't that great? Nothing's free in the world.
Well, you got a free lunch today, right?
Free lunch.
Again, thank you for attending, and we're going to let you go right after the big prizes are drawn. We've got the new Hotel Sorella. For how many of you have just been here for the first time? Well, welcome. It's been a long time coming, the center actually. So the hotel just opened. They have a great bar too over there. Just by the way, I've already been there. But we have Anne-Marie. She went over there and asked to get a weekend night stay. So thank you, Anne-Marie. Plus a $50 gift certificate for raw sushi at that night stay. So I'm gonna draw for that right now. We have one more prize after that. It's Barry Anderson with Texas First Bank. And we've also got an iPod. And you have to be present to win. I didn't say that, but good Barry, you stayed, right? Congratulations, Barry. You're welcome. And the next one is Mark Worthen with Trustmark Bank. It's the iPod. Oh. Well, Jenny, you might want to mention to him. It's a little early. Oh, yeah. Rand Lassus. Is he still around? Yay, you won the iPod. Thank you, everybody. Please, you feel free to stay around and network a little bit more if you want, or get back to those special assets.